right, everybody. Good afternoon. Welcome to today's webinar, How to Master Moving Averages. My name is Jerry D'Ambrosio. I'm the Manager of Educational Content here at VectorVest. I want to welcome everybody to today's webinar. I'm excited to spend the next hour with you diving into one of the most powerful, I think, and practical strategies available to active traders and investors today. Okay, so again, I'm Jerry D'Ambrosio. I've been with VectorVest now about 20 years. I've learned a lot, and I've learned a lot of different techniques from some of the very best professional traders that I've ever met. David Paul, Stan Heller, to name a few. So I'm just very happy to share one of the many techniques that I've learned along the way. I use it myself. I use it in our swing trading coaching group a lot as well. Some of you guys might be swing trading coaching group members. You're familiar with the EMA squeeze. That's the technique that I will be teaching you guys today. Before we begin, a few housekeeping notes. If you have a question, and I do see you there, Roger, so I see a couple of guys already, a couple of folks already typing in questions, comments. If you have one, please don't hesitate to ask. We have a few people, a few folks in the background. We got Jessica and Thad from product support. We have Rick Franklin as well in the background. If you have a question, just type it in the question for staff box. I am streaming live on YouTube as well, so you guys know the functionality there. Just simply type in some questions if you have it. This is what your GoToMeeting control panel looks like. Just click on that orange arrow if you can't see the panel to the left. Be sure as well that your speakers are turned on, of course, and if you do lose audio or video, just try logging out and logging back in. That usually works. All right. We've got a lot to cover today. I really want you guys to stick with me to the end. We'll be together no more than an hour. If you stay with me to the end, I'll share with you a copy of today's slides. I'm going to be in the program as well. I'm going to be in the VectorVest software as well, but you'll have the slides here that I use as a resource for later on. Just somebody remind me at the end. I usually forget. Got a lot to cover here today. Okay. All right, what we will cover here today, just some key concepts first. By the way, we do have a new Mastering Moving Averages course launch coming up in a couple weeks. I'll talk more about that later. But moving averages remove the noise and define the trend to help us predict if the stock will continue to move up or down. And what we'll cover today are 5 key ways to use moving averages. And I'm going to teach you guys a very simple but effective swing trading technique called the EMA squeeze. It's a complete trading system. So you'll never worry or wonder, what do I do? I used to get the question all the time, and I don't get it anymore, which I'm very pleased about. You know, the question was, hey Jerry, I'm in stock XYZ. I'm down X%. What do I do now? Right? My response always to that was, hey, you got to have yourself a plan when you get into the trade. So let's start doing that more often going forward. You know, of course, can't necessarily tell you what to do with a stock like that, or can't answer that question directly, but we can fix mistakes if they happen. This trading system eliminates that question from ever being asked. Okay, you'll never wonder what to do, because you'll have a structure in place to buy and sell. Okay, so let's start with the basics. Why moving averages? Why use moving averages? Moving averages help, again, smooth out price action so you can focus on the trend, direction, and momentum. So moving averages don't only identify trend, they identify momentum as well. Okay? More than that, moving averages form the core of other technical indicators like MACD, Bollinger Bands, stochastics. Those are just 3 of my favorites. Whether you're a beginner or an advanced trader, understanding moving averages gives you a serious edge. Okay? The 2 most popular moving averages are the simple moving average and the exponential moving average. The simple moving average is determined by dividing the closing prices for each day in the look-back period. No price in the look-back period has more weight than any other price in a look-back period. Okay, it's a simple moving average. EMAs give more weighting to the more recent prices. EMAs are the desired moving average for traders, active traders, swing traders, because recent price action is more important than 20 days ago or 19 days ago or 18 days ago or 17 days ago if we're looking, let's say, at a 20-day moving average. Okay? Here's an example too of the sensitivity of those moving averages. Here's a 13-day simple moving average and a 13-day EMA. You can see that the 13-day EMA hugs price a little bit more closely, is more reactive to price, and will change direction first. You can see that during this time period when the 13-day simple moving average was rather flat, you could see a couple of crossovers between by the 13-day EMA. Okay? Just let me reiterate. If you plot both moving averages on the graph, you'll see on any stock that the EMA hugs price a little bit more quickly and is more reactive. We teach 5 high impact ways to use moving averages. Number 1, define the trend, see if it's up or down. If price is above a moving average, the trend is up. If price is above the 50-day moving average, the intermediate term trend is up. If price is above the 20-day simple moving average, the short-term, mid-term trend is up. If price is below the 8-day exponential moving average, the short-term trend is down. Price above the 200-day moving average, your long-term trend is up. So where price is in relation to the moving averages will determine whether the trend is up or down. You can also determine how strong the trend is by the slope. Okay, the slope of the moving average. We'll explain that a little bit next. It triggers buy and sell signals, so you'll know when it's safer to enter a trade, you'll know when it's safe to exit a trade. It assesses market conditions as well. You can apply moving averages to the S&P, the VectorVest composite, right? Those are broad market indexes, and the analysis is the same. Okay? They identify also support and resistance. They are dynamic support and resistance zones. Okay, because they're always moving, right? The way we usually think about support and resistance are horizontal lines at almost precise or exact price points. They're also zones. It doesn't have to be exactly to the penny, but you know what I mean. The horizontal support and resistance zones. Moving averages are support and resistance, but they're dynamic and they keep moving. Also, is price overextended? You know when price is overbought or oversold when it's pulled so far away from its moving averages. We learned this back in middle school, right? The further something gets away from its average, the more likely it is to revert back to it. So we can identify whether a stock is overbought or oversold by how far it is extended away from that moving average. Okay. Here's just a chart of 6 moving averages, 2 EMAs, 4 simple moving averages. The short-term moving averages are the EMAs, the 3 and the 8. The medium short-term, or I guess you can call it medium short-term, is a 20-day. You can use a moving average for that. You can use an EMA for that. If you were, my rule of thumb is if you're 20 period or less, use an EMA. 20 period or more, use a simple moving average. So you can use an EMA or a simple moving average for the 20. But absolutely, when you go shorter than that, you're gonna definitely use an EMA. Left-hand chart, it's funny, Stan Heller would laugh at this because he created a slide that says moving average pointing towards 2 o'clock is uptrending. Well, that's not exactly 2 o'clock, is it? That's 10 after 10, 10-10 there. But you get the point. The big hand there is pointing to the 2. That is the ideal slope of moving averages when they're uptrending. Okay, and 45 degree down to 4 o'clock roughly, is the desired direction and slope of moving averages in a downtrend. And because traders buy and short stocks, this type of analysis is important. Understanding downtrends just as much as understanding uptrends. Now, that's an overview of moving averages, just a kind of a general overview. Understanding the difference between short-term moving averages, mid-term, long-term moving averages, the difference in analysis as far as what is the trend, right? So again, let's say price is above the 200-day moving average. Well, that automatically tells you that the stock is in a long-term uptrend. But what if it's below its 50-day moving average? Same stock, it's below its 50-day moving average. Well, the intermediate term trend is weak or down. So you have different trends. Your moving averages will help you determine what all the trends are. Okay, you're not just concerned with the short-term trend. I don't care if you're a short-term trader or not, or a swing trader. And yes, the short-term trend is really good, what's going to determine whether you take the trade or not. But you have to understand what the long-term, mid-term trends are as well in the context of what you're doing, if that makes sense. Okay. But so now let's get tactical. One of the most effective setups we teach is what's called the EMA squeeze trading strategy. So here's the idea. We use a 5-day EMA, an 8-day EMA, and a 13-day EMA. And we look for those 3 EMAs to squeeze together during quiet pullbacks. Then they fan out and trend up. That squeeze and release pattern is your clue that a breakout is likely and that a continuation is likely. The best part is it's rules based. Okay? Here are the buy rules. So we're going to lay all of them out for you. There are 4 in total. All have to be true, all have to be met in order for it to be a candidate. First, the 5-day EMA has to be above the 8. The 8-day EMA has to be above the 13. Also, a prerequisite, price needs to be above the 50-day simple moving average. So either first crossing above it or living above it for a while. And the EMAs had squeezed together, but above the 50-day moving average. Can you imagine a stock that's in a really strong intermediate term trend, right? Higher highs and higher lows for, I don't know, 6 months or so. Pulling back off of a new 6-month high. What are those 3 EMAs going to do? They're going to squeeze together. They're going to squeeze together. Hopefully, and what you're looking for is price to stay above the 50 and then retrace off the 50. The squeeze turns into the fanning action of the 3 EMAs, and that is also a setup. So it can be that situation, or it can be price just first crossing above the 50-day moving average. We'll look at some examples. RT is trending higher over a minimum 3-day period. Okay, so RT has to be higher than it was 3 days ago. And then the market has to also be in an uptrend. We say that DEW is up. It can be any market timing signal. Just make sure that our guidance is bullish and it's saying that it is okay to buy. Those 4 rules have to be met. The sell rule, which we call it your last line in the sand, is you're closing the position when the 5-day EMA closes below both the 8 and the 13. Okay, no ifs, ands, or buts. There might be opportunities for you to close the position before that. You want to take profits. That's always your prerogative, right? You know, maybe a stock's retracing from resistance, or a stock has a bearish candlestick formation and is overbought, and you have a 30% gain, right? But you have a 30% gain because you've been in it for a little while, because the 5-day EMA never closes below the 8 and the 13. This system is not only for shorter term traders. It could be used as a short term technique, but if the stock performs well and just continues to move higher after you take the trade, and the 5-day EMA never closes below the 8 and the 13, you could be in for months, which is not necessarily the holding period of a swing trader, a little bit more of an investor, right? Well, kind of in the middle. Okay. But that is your absolute last line in the sand. Here are some examples, quick little kind of mini charts here. We'll look at some real stocks in a moment. But here's an example. Let's look at the left-hand side. You got the pink line there, the 50-day moving average. The green line is the 5-day EMA. The red line is the 8-day EMA. And the blue line is the 13-day EMA. Let's look back here first as price was falling. Okay, price falling. 5-day EMA below the 8, the 8's below the 13. You're in a short-term downtrend. You're also in an intermediate-term downtrend as well because price is below the 50. Then the stock price rallies and begins to approach the 50-day moving average, and those three EMAs squeeze together. You can see the squeeze, right? Basically sitting right on top of each other. And as price continues to make its move towards the 50, they begin to fan apart. The 5 goes above the 8, the 8's above the 13. Here, though, in this situation, we need for price to close above the 50-day moving average before it is even a candidate, before we can even consider buying it. The squeeze and the fan might happen below the 50. The squeeze is going to happen below the 50 for sure. The fanning even might begin below the 50, but you wait for price to cross above the 50 in this case, and you take the trade on confirmation the next day. RT, remember, needs to be rising as well, and you can see it was here. Remember, and there is no stop loss, right, with this technique necessarily. It's not a stop price. It's an exit criteria. You're using the moving averages to exit. You're following the moving averages. So, you know, when you take the trade, you don't even need to have price on the chart to help you determine when to exit, because it's the moving averages that you're using. Okay, so here's your sell rule. We call it a prudent sell rule because you're going to give back some. You know, after the stock pulls back from its new high. Here you can see where you would exit when the 5-day EMA closes below the 8 and the 13. There are warning signals prior to that. There will be. Gap in the bands is widening. Okay, 5-day EMA pulling so far away from the 8, 8's pulling away from the 13. The gap in those three EMA bands are widening. That tells you price is really overextended and that a reversion back to them is likely. You also might see during that time RT price divergence, where RT is falling but price is rising. That's an indication of a strong, a weakening trend. The 5-day EMA squeezed together towards the 8, not yet crossing below both yet, but still squeezing towards the 8. That's another warning signal. Oh, by the way, at this high here, when the gap of the bands is widening, RT might be diverging. You might see a bearish candlestick formation. Okay, a bearish engulfing, a bearish harami, maybe a hanging man, or a one black crow, dark cloud cover. Those are some of the bearish formations you might see. And if you see follow through over the next couple of days and you want to take your profits, you can do that. But remember, this is without question when you are going to take action, when the 5-day EMA closes below the 8 and the 13. Okay, we have examples in the slides. I'm going to give you these slides. Okay, but I'm going to hop into the program and I'm going to show you some real-time examples and just in general how to find these types of setups. Okay, I'm going to go into viewers, and so the first way is kind of your cherry picking exercise, right, where you look at a list of stocks, you throw them on the chart, you set the layout accordingly, and you look for, as of today, the hard right edge. You look for, do you have a setup or not? So my preferred method, I like going into the S&P 500 watch list. Simple, sort by VST, and just look at the top charts. This is a list of stocks that we're familiar with, comfortable with. These are the top VST stocks in the S&P 500. I'm going to put my EMA squeeze layout on. Remember, 50-day moving average. Let me remove some of these lines. 50-day moving average in green, 5-day EMA is in yellow, 8-day EMA is in red, 13-day EMA is in blue. You got volume and you got RT at the bottom. So that's all I really need. Okay, I will send the slides, guys, in the I'll put them in the handout section of the go-to meeting control panel. All right. So, as of the hard right edge, based on what I explained to you, do we have, as of the hard right edge, an EMA squeeze setup? My answer is no, we don't, because there has not been any squeeze here a week ago or a few days ago, right? The squeeze was really all the way back here. So if we take a look at NVIDIA back here, where price had been below the 50-day moving average for a while, right? Those three EMAs were below the 50, so you're downtrending here. But now price approaches the 50. Here is then where the squeeze occurred, and here's where they begin to fan out. Barely did that there, barely did that there. Now we're starting to see that here, right? Beginning of May. Nice fanning out of the moving averages. Price closes above the 50-day moving average on May 2nd. Here's when I would have taken this trade. I wouldn't have taken it the next day, even though I would have gotten a better price. I wouldn't have taken the day after. There's no follow through there, right? If I get my signal there on May 2nd, I'm looking for follow through the next day. I want price to move higher the next day, not lower. It moved lower for a couple of days there, but then there's your confirmation day right there. Price is still above the 50, actually pulling away from the 50 even more so. You have the separation of those three EMAs, really nice fanning out. RT is moving higher. Okay, there's your trade. Right? Right after the squeeze occurred and the move began. We are way late here. This is not an EMA squeeze setup. And look at what would have happened too if you would have taken this trade way back on May 7th. There was a little bit of noise here, right? And a kind of a big down day there, selling pressure, big down day. This system didn't shake you out of this trade. Okay? The 5-day EMA never went below the 8 and the 13. So you'd still be in today. It's not a setup today, but you'd still be in the trade if you bought it back there. All right, let's look at AVGO. Right, a hard right edge. I'm going to take price off. Are we seeing the squeeze? I wouldn't call that a squeeze, no, because that's more of a convergence of the 5 and the 8 than an actual squeeze of the 3. The squeeze of the 3 has to look like that. It can look like that when it's below the 50, or as you'll see in a moment, it could look like that if it's above the 50, but that's what it's got to look like. Squeeze and then the nice fanning of the nice separation. Not only are we not getting the squeeze here as of the hard right edge, we're not getting the separation either. But there, back here, is when you could have taken the trade. Okay, and you'd still be in it if you were following the prudent set of rules where you're not going to close the position until the 5-day EMA goes below the 8 and the 13. I don't know if I would have blamed you if you would have taken profits here. Kind of an inverted hammer there. Down day, another sell-off. So if you have a sizable gain here and you see that type of selling pressure on high volume, I wouldn't have blamed you if you would have taken it off. Okay, maybe take half your profits and you can let the rest run and use the moving averages as your exit criteria for the remainder of the position. All right, here's NRG. Looks like we've gotten the squeeze here. So this is one where price is already above the 50, right? The 3 moving averages are above the 50. There's some consolidation here. I would have liked to have seen the price consolidate more towards the 50 than just kind of moving sideways. So not an ideal setup, but I do think if price moves higher than yesterday's high, it might continue to move in the right direction there. Let's take a look at this one. Nope, not with not with STX. So you're seeing the monotonous kind of time-consuming exercise this is, where you're looking at charts. Got to look at charts. Got to open up the chart. Hard right edge. I'm not seeing a setup here. You do want to use history though as confidence in saying, you know, if I would have taken it back there, that would have been a pretty good setup. Same thing with APH. It's not set up currently, but here Kind of right in this area here as price moved away from the 50. That was a really good entry. Another one where nope, you're not in set up territory as of the hard right edge. So you would have to do that exercise. Go through each chart in the list that you're looking at and see if you have an EMA squeeze set up. Okay. My preferred method is to use Unisearch. Now, this folder here is not a folder that anybody has. It is only, these searches are only available to those who do take the Mastering Moving Averages course. Okay, all of these searches will be provided to you guys. Not that we don't insert into your programs, but Stan Heller was nice enough to create slides or images and videos on how to create these, and we'll go over these as well in our mastery sessions when we begin on July 2nd. Okay, I'm going to run the search as of yesterday. Yesterday's close. Watch how quickly. I'm going to look at more than 10 now. Let's look at 50. Watch how quickly it finds stocks. You know what? What we can also do? Watch this. I'm going to filter by watch list. That watch list is going to equal the S&P 500. And then you run it. Ah, look at that. We would have went through 500 stocks and only found 5 that meet the EMA squeeze criteria. That would have been frustrating. All right. I'm going to right click. I'm just going to delete that parameter. We'll run the search. Let's look at the whole database. I'll graph the stocks. All right. I'm going to take price off. Look at that. Right? Exactly what we're looking for. I'm going to take price off. I'm going to zoom into the hard right edge here. We got the 50-day moving average. It's up sloping, so price is already above it. Right? This is not one where price is just crossing from below the 50 to above the 50. We may find one of those, but that's not what we're looking at. Here is your squeeze. Right here. And then here is your fanning out. RT is rising. Good volume here today. Was that today? Today's the 17th? Yeah. So we're going to back up because I ran it as of yesterday's close. This is what it looked like as of yesterday's close. Still good. Nice fanning out of the 3 EMAs. There is where the stock price closed yesterday. I would have used today's close as confirmation, 21.13. Clearly price moved above yesterday's close today. You would have taken the trade. So real-time example provided to you with a few clicks instead of having to look at a ton of charts. Let's look at the next one. Again, this is as of yesterday's close. All right, let me back up. Now, there's also a bit of cherry picking that's required here. It's not just blindly buy the top 10. You'll see what I mean in a second. This is a good one, EQT. So as of yesterday's close, here was your squeeze right here. You see when all three are just sitting right on top of each other there, and then price continues to move higher. Good heavy volume is coming in, which is great. EMAs begin to squeeze apart. Price closes yesterday at 58.17. I'm taking the trade today on follow through. So this is another good one. Nice little breakout too. Okay, let's look at the next one. Another good one, EXE. There's your squeeze. There's your crossover now. There's your fanning apart of those 3 EMAs. Stock is in a pretty strong now intermediate term trend, right? Because the 50-day moving average is beginning to slope upward. Talked about the slope and how it determines the strength of the trend. The intermediate term trend is strengthening. You know why that's important? Because the pullbacks that we're trying to recognize, right? These pullbacks back towards the 50, which gives us the opportunity for the squeeze and then the release. These pullbacks will likely be just pullbacks because you're in the midst of a strong longer term trend. And then you take the trade today on follow through. So 3 for 3 so far in the top 3 stocks that we've looked at as of yesterday's close based on the EMA squeeze. Let's look at this one. Man, I see the squeeze. Do we have the separation yet? I would give this actually one more day. Let's see what it did today. Actually went down today, so it didn't even follow through today. So if you were looking at this as of yesterday's close, and you would have argued to yourself and won that you had the separation between the three EMAs because it's close. Whoops. It's close. Not where I want it to be, but regardless, you didn't get follow through today, so you wouldn't have taken a trade. So now this is no longer really a setup, is it? Because you don't have, as of the hard right edge, the release, the separation of the three EMAs. Good question. Does this work intraday? It does. It does work intraday. Moving averages are price-based. It works on ETFs as well. Works on intraday. I would slow things down though. I wouldn't look at 1 minute bars. I'd look at 5 at the shortest. But it does, absolutely. All right, let's look at the next one. Hard right edge is the 16th. I would say no, this is not really a setup just yet. I'm not seeing the release and the separation of the three EMAs just yet. Now this is the hard right edge. I don't need to see a little bit more upward momentum, right? We're kind of stalled there a little bit. So I would probably just use in this case the high there, 296.95. Imagine price moves to that level, what the three EMAs will do. They'll begin to fan apart. So a little consolidation here. I just hold off on that one. But you get the cherry picking process here. It's a little bit easier because the search found the stocks faster. This is kind of a mess here. I would pass on this one. Right? Not quite seeing exactly what the others were displaying. This is a pretty good one. So you kind of want you want a cleaner pullback. Right? A cleaner transition from the 5 above the 8, 8 above the 13. You want from that, you want the squeeze to occur and then the separation again and the release of the 3. So that's much better. Absolutely not. I would cancel. Well, first off, go back to yesterday. Actually, so if this was yesterday's close, I'm kind of seeing what I want to see. But man, these two candles kind of worry me a little bit, right? They're basically two shooting stars. They're not inverted hammer charts, shooting stars. Closes well off of the highs on both days. Long upper wicks, so selling pressure really began to increase. And regardless, you didn't get follow through. You can almost expect that to happen, right? When you have this type of look at the long upper wicks when you look at a chart, and for the most part, you're going to see the long upper wicks appear at highs or before softenings and before pullbacks, because the selling pressure actually begins before the stock price begins to fall in those cases. And that's what happened here over the last couple of days. All right. To set up the EMAs on the chart, just simply right click on price, go to add moving average, exponential, select 10, and then change the value. And then check the box. Okay, that's how you do it for all moving averages. Okay. No, so Greg, the 5, the 8, and the 13, they're EMAs. Stands for exponential moving average. Exponential moving averages are more reactive to price because they put more put more weight to more recent prices, as opposed to a simple moving average where it's just a simple average. No price in the look back period holds any more weight than any other price. So the shorter you go, the more reactive you want the moving averages to be. So therefore, use an EMA. All right, let's go to the next one. You got it, man. All right, absolutely not. So bit of cherry picking here. Do not just go in here and blindly buy the top 5 stocks. I kind of like this one because moving averages are separating. There was your squeeze throughout this entire period. Now we're starting to see true direction, right? Price beginning to rise. Right, I'm going to hop back in. I'm going to fast forward here a little bit. These are the slides that you guys will have. They're just some visual representations of what I just went through. Okay, so you guys will have these. I'll put them in the handout section of your GoToMeeting control panel. If you are joining us via YouTube, you'll get them as well. Okay. All right. So the question is, you take the trade at the close once there is follow through. No, not at the close of the follow through day. Earlier on in the session of the follow through day. So price closes above the 50. You know what your confirmation price is. The next day, let's wait 15 minutes to a half hour, and then you place your trade if price is above your confirmation level. You don't have to wait for the close. All right. All right, give me 1 second here. Let me resize this. Come on. Oh, gosh. Okay. Finding these setups, like you just saw, can be time consuming unless you have the tools within VectorVest. So here's how simple the process is. There's a few different ways. Stock viewer, why is it my, there we go. Stock viewer ranks and sorts the top candidates really fast. Open up the stock viewer, you can actually sort in a couple of different ways. VST, RS, CI. Combination of those three, or just individually. That's how I would use the stock viewer for this strategy. Watch lists. You can go in there as well and do the same thing. Now these are just pre-built lists or customized lists of your own, where you can, if you have a list of, I don't know, 50 stocks that you like and you built that watch list yourself, you can look through it to find EMA squeeze candidates. So it's just lists of stocks that you would look through to find tradable candidates. My preferred method is the Unisearch. It lets you run advanced technical searches with exact moving average conditions. Little cherry picking after that. What I always say about scans like this is they get you most of the way there. They get you there faster. Okay, this is how traders save hours each week. We looked at real trade examples, and we will look at real trade examples in this course. But even in this session, we did. It's so easy to graph and confirm the setups, right? It's a pretty simple approach. It is rules-based, but not difficult to understand and trade. Using history, too, gives you confidence. So that's why we went back. So when we were looking at the S&P 500 watch list, we were looking at the hard right edge and saying, any stocks here meet the criteria? We said no, we said no, we said no. But we looked back at the previous setup, previous crossover, and you'd still be in a lot of those trades still today. All right. So here's what we covered: 5 key ways to use moving averages, and then I think the highlight really of today's session is the EMA squeeze trading system. It's a complete system. There's never any concern or worry about what do I do. Very, very rules based. Here are the buy rules. Okay, we say DEW up market timing. It can be any market timing system. It has to be pointing upward. So at least the primary wave up, green light in the price column of the color guard, ideal. But that has to be there. Price has to be above the 50. And we also said that it can be first crossing above the 50 after being below it for a while, and now you have an emerging intermediate term trend, or it can be above it for a while and you're in a strong intermediate term trend, but your short term trend has weakened temporarily, and then you get the resumption of that trend. RT needs to be trending higher, not just, it doesn't have to necessarily be trending higher day over day, but over the last 3 days it does. So it has to be higher today than it was 3 days ago. It might be a little bit lower today than it was yesterday, but it's got to be higher than 3 days ago. And the sell rule is the 5-day EMA closing below the 8 and the 13. That is your excuse me, last line in the sand. There are ways to protect profits before that happens, because yes, when that happens, you will have given back some profit. It's impossible to know exactly how much, but you'll be given back some profit. So there are opportunities to take profits earlier, and if you want to let the rest of the trade run and use that 5-day EMA closing below the 8 and the 13, you'll still give back some of the remainder of what you've left on the table, but not all of it. All right, so let's talk about what's in the Mastering Moving Averages course. Okay, you'll get 10 structured lessons, including trading with a single moving average, so just using a 20-day simple moving average or just a 50-day moving average to identify buy and sell signals. You'll learn how to use moving average as support and resistance. Golden crossovers, so now we're using multiple moving averages and identifying changes in trend with crossovers. So a change in the long-term trend would be your 50-day moving average crossing above your 150. A change in the really short-term trend would be your 3-day EMA crossing above your 8-day EMA. Okay, you'll learn more about the EMA squeeze, long and short systems. So there is a short system. Okay. There is a bearish setup as well. What we call the guppy, this is a multiple moving average systems, and then we have the Midas touch as well, which uses moving averages. You'll get a bonus recorded session called high-low moving average bands. Plus we include homework, case studies, and we will be doing 6 live mastery support sessions, all right, to help you lock into the content. Okay, Michael says you really should add the additional sell rule of exit 50% when 5 crosses the 8 and the remainder when 5 crosses. Okay, so that's very similar to what I was saying. Take half your profit, let the rest run until the 5 closes below the 13. But sure, when the 5 closes below the 8, that is a time to take profits as well. All right, let's see. A second here. All right, I will answer some of your questions here in a moment, guys, but let me just kind of wrap things up. What I'm going to ask one of the guys to do, I think, have they done it already? Nope, not yet. I'm going to have them put that address that you guys see at the bottom there, www.vectorvest.com/MA. Either Jessica or Rick will put that, or Thad will put, I'm not sure if Thad's has the ability, but somebody put that address in there in the chat box, and you'll be able to click on it. So we do have a new course coming up. $595 is the regular price. The special bonus webinar bonus for you guys, only you guys here, this price is going to go away in a couple days. $295. You get 6 mastery sessions, and that it's not a live bonus session, sorry, it should be a recorded bonus session, but you really get kind of 7 sessions. If you are a VectorVest subscriber but don't have US real-time data, we're going to give it to you for 70 days. You'll get intraday Canada as well. If you're not a subscriber, we're going to give you access to the program for 70 days. Basically, the duration of the course, you'll get our US real-time program. Access also includes ProTrader. This is for technical searches, and the Auto Timer Genius for backtesting and portfolio management as well. Okay, again, the price is only available for webinar attendees, and it's our lowest price that we'll offer. All right. Let's see, a couple of questions here. Is the information also in the swing trading course or only in the Mastering Moving Average course? The EMA squeeze trading system is only in the Mastering Moving Averages course, Lance. Okay. The next precision swing trading course, you say when is the next swing trading course? So I assume you mean precision swing trading. We just kind of wrapped that up. I'm not sure when we'll be doing that again. Is this the updated Mastering Moving Averages? I'm not sure when was the last time we updated. It's hard to know when you last took it, maybe, Willard. Price for elite subscribers, Devendra, is $295 right now. Normally it's $297.50. So even if you don't sign up today but sign up before our first mastery support session on July 2nd, you'll get a good price. You'll get $297.50 at the most, but it's $295 now for most everybody. Okay. So here is the class schedule. We do begin on July 2nd, so almost 2 weeks from today. You'll notice that we will review in session number 1 lessons 1 and 2, and it's because they're a little shorter. So a couple of times here we have 10 lessons, and we're not doing 10 mastery sessions, we're doing 6, so of course we would have to bunch lessons together. So here's the schedule. When you register for the course, you'll also get an email with this schedule. In a minute or so, I'm going to put the slides in the handout section of your GoToMeeting control panel, so you'll have them as well. Okay, but here are the dates: July 2nd, July 9th. we'll go over lesson 3, July 16th, lesson 4, July 23rd, 5 and 6, because they're a little shorter, and so on. Okay? Oh, let me go, shoot. Hold on one second. Let me do something here real quick. Give me a second here, guys. Sorry. There we go. All right, give me 1 second. I'll just gotta do that. Okay. All right, let me go back a couple. There we go. All right, if you have any questions, I'm going to give you guys my email address in a little bit. Okay, email me or Rick Franklin. Okay, and I'll give you guys my email address in a moment. Okay, Stan used to deliver this course, but no longer. Rick has taken over, and so you can email either myself or Rick if you have any questions. Okay, so here is the 10 full lessons. Here's what your outline looks like, your course outline in the university. I do want to share with you a few testimonials that we received, after some of the more recent Mastering Moving Averages courses that we did. Robbo said, "Thank you once again for a great presentation on the multiple moving averages. Your Mastering Moving Averages course, as always, is well documented and has a wealth of information." He really liked the 20-day moving average channel search. So you'll find something that you'll like. Might not be the EMA squeeze, but it might be something like a single moving average trading system. Okay. Warren G said, "After taking the Mastering Moving Averages course, I am now able to better determine my entry and exit points." What he did was he took his past trades and applied some of the moving average techniques that were taught in the course. He said, my win-loss ratio following my old plan resulted in 51% winning trades with very little monetary gains. If I would have followed the 20-day EMA strategy on those past trades, he says, I would have had 75% winners produce my largest portfolio gain, EMA squeeze 84% winners, second largest portfolio gain, golden crossovers 64% winning trades, and the smallest of the 3 gains. He said, I would gladly take in half the portfolio gains in any of the 3 strategies. Okay, so there's my email address, jerryd@vectorvest.com. Shoot me an email if you have any questions. I'm going to put the slides now in the chat box. Give me 1 second while I do that. There's the handouts. I'm going to choose file. There it is right there. Oh, first time. That's good. All right, so in a second you're going to see the Mastering Moving Averages. There we go. It's the PDF, and it is the slides that I used here today. Okay, let's see, a couple of questions here that I missed. What is the cost of ProTrader? Is it a wrap-up or other features? Let me show you guys ProTrader real quick. ProTrader is this. In Unisearch, you'll have a ProTrader folder. It's technical analysis and moving average scans. All right, so there's a lot of pre-built scans already in here in ProTrader, but it just gives you the ability to create scans using moving averages and including technical indicators. Okay, and the cost of that, I think, is just a one-time cost. If you don't want real-time, it comes included with real-time data and the real-time program, the premium program. But I think it's either $3.95 or $4.95 one-time fee. $4.95. Thank you, Jessica. No, Greg, unfortunately not. The searches are not included in the mobile app, only on the desktop version. All right. Yep, I did there, Bodan. I put the slides in the handout section of the GoToMeeting control panel. Those are the chart examples that I have in there. Okay. So by the way, the live mastery sessions are recorded. If somebody's saying that they can't make it during the live sessions, but they are recorded, and they are uploaded to the university within a day. So if you miss the live session, you can always watch the recording Plus, you'll have access to everything, all the content for a year. I don't know when the next time we're doing this course. We haven't done it in a year. It might be another year until we do it again. But you do have access to all the content for a year, even if you miss a couple live sessions. Okay, good, David. Awesome. Thank you. So, thank you on the pricing. Well worth the price. Absolutely. You know, if you consider the list price and the price that we're offering here, kind of a no-brainer, right? All right, guys. So my email address, jerryd@vectorvest.com. Any questions about anything that I covered today, shoot me an email. We start in 2 weeks. You can watch as many of the modules as you want, as many of the lessons as you want. You'll also see the old mastery sessions that we did last time we did this course. I think it's been a year or a little bit less. You'll see those. They will be replaced. Those mastery sessions will be replaced with the ones that we do, and that's how you'll always get the new content for the year moving forward. All right, then you're welcome, guys. Have a great rest of your day, and look forward to seeing you guys in our July class. See you guys on July 2nd.